very esteemed practitioners of GST and those of you who have come here for this knowledge sharing session of the GST and Indirect Taxes Committee. A warm welcome to each and one of you, and sincere thanks to you for supporting all our initiatives aimed at empowering our members in the GST space. As all of you are aware, the GST and Indirect Taxes Committee regularly, continuously ensures that the GST canvas is always active, colorful, and whatever the knowledge that the members require is delivered to them at their doorstep. Through various initiatives like seminars, lecture meetings, webinars, etc. Directly from the New Delhi, from our headquarters, we air these VC sessions. Our committee secretariat, Smita Mishra, and her team is always working 24/7 to ensure that GST becomes a tax which is loved by all. During the course of these 7-8 years of GST, the committee has identified, tapped, and also honed the skills of various chartered accountants to deliver the best in GST when it comes to lectures and seminars. In that context, my dear friends, we have here with us CA Sharada, who hails from Chennai. She is a chartered accountant in practice and specializes in the GST regime. I must say, she is also one of the products of the GST and Indirect Taxes Committee, who has regularly supported us in all our initiatives of knowledge sharing, whether it is seminars, conferences, lecture meetings, or whether it is our writing of books, reviewing publications, and so on. In fact, I don't know how many of you are following her in the Instagram, where she comes with a short bites on GST, and which she calls it as GST in shorts with Sharda. That's how, and I'm telling you, I'm also one of the fan of that GST in shorts with Sharda, and I regularly watch also, and I get an update also. Because you see, you can't keep track of so many things on a regular basis. So it is people like Sharda who come up to us and deliver. That is something important. And in these days of fast-paced life, sometimes you can't listen to long lectures. So a short presentation of what has happened, what amendment has come, Sharda does it well. So thank you, Sharda, for coming here, for sparing your valuable time with us, and being ready to share knowledge on the GST refund mechanism and the latest judgments. In fact, all of you will be aware that consumption taxes like GST are also successful when there are refunds possible. In taxation, refunds are possible. Refunds should be possible. So without refunds, I don't think the tax will taste good. So in this context today, we have Sharda, who is going to take us all through this particular refund mechanism and also the latest judgments. And I'm confident all of us who are attending this program will stand benefited by her eloquence in this subject. So warm welcome to you, Sharda. And I also thank the GST and Indirect Taxes Committee for continuously working 24/7, 365 days to make life simple for all of us. Thank you, Smita. And thank you, Impreet, who is coordinating this session today from the committee. And let us all now hear Sharda. Thank you, Sharda. Over to you for further deliberations. Thank you very much.
Thank you very much, sir. I think, it's a privilege for me to hear such a kind introduction from someone senior like you who has definitely mentored me all these years. As you rightly said, I'm one of the proud products of IDTC because ever since, 2017-18, I have seen how much IDTC has given me the opportunity, not just me. I'm sure, throughout the country, there are several members who have always been given without any kind of bias. I have always seen many youngsters, many upcoming professionals also who have been equally given enough opportunities. by IDTC, be it these kind of video conferences or writings in the articles, and then when it comes to book publications, etc., etc. And especially for me, IDTC is very close to my heart because that's exactly where I started with my authorship of the book. And when I talk about the authorship of the book, definitely I think 100% credit personally goes to RK sir, because I remember I told him, sir, I'm not really sure if I'll be able to do at this point of time since my hands are full with couple of personal commitments. But then he told me at that point of time, nothing doing, it was given to you. I'm confident you will come out with it. Even if you want to take a bit extra time, make sure you are coming out of it. It was his confidence which has probably evolved me through this journey. So thank you so much, sir. I think not just as a formality, because I have seen several times wherein even smallest things, even if you want to convey me, just a quick call, Sharda, see, this is what you need to just immediately patch up, get yourself fixed up on these things. It's only few people who directly course correct us as we mold in this journey. Yes, most of us will be able to applaud in front of all, but very few actually give the very genuine feedback. These are the things which you need to improve upon. These are the things which I'm really proud of. So I think, you have been tremendously a big reason for me to wherever I am here today. And thank you so much to IDTC as well, Smita ma'am and Preet, who have always been really supportive in all these kind of opportunities, and the way in which, I must say, IDTC related all these kind of, whether it is meetings or certification courses or anything, the way in which it happens flawlessly, the way in which it is being 100% perfectly coordinated without any kind of communication gaps, the way in which the delegates as well as the speakers are being perfectly coordinated with whatever that is required. I think that's something really important in any event, right? So that our focus is only on what we need to be giving, and the participants' focus should be only on taking away what is required. In between, there is IDTC which takes care of everything. So thank you so much, sir, for all these valuable ways in which you are shaping up many professionals. And yes, directly we will get on to the topic for the day. I think 8 years since GST law has been introduced, but I would say we have broadly settled in GST refund and greatly unsettled in GST refunds. When I say we are settled, the major reason for why I can call it as that we have settled is, especially when it comes to export of goods. I think most of the people who are getting into the with payment of duty, yes, they are able to get honestly seamless refund of whatever the GST credit that gets accumulated. But except for that, wherever we have to get refund, I think definitely there is a major challenge with which taxpayers are facing. And it's not just the taxpayers. I believe even the officers are sometimes facing the difficulty because they are clueless. Though sometimes, yes, logically they are convinced, yes, they want to give, but they are not very clear what kind of board instructions have been given to them. So these are some of the intricacies which definitely still prevails in the GST refund regime, though it has been 8 years. And apart from that, I must say that the predominant number of decisions when it comes to the High Court decisions in the GST law, it is mainly in the area of refund. The major reason being, I think somewhere after 2022 is where the major assessments have started happening for, starting from 17-18. But until then, the greatest part of any kind of communication exchange that were happening until 2022 were predominantly refunds. So it's only from 2023, the assessments or the audit and all those things have actually got geared up, right? So on those lines, I think the court has also played a very important role in terms of shaping up the refund the way in which it is today. And as I said, even CBIC plays a very important role in the way in which the circulars have been time and again issued. Honestly, yes, there are some circulars which are not exactly aligned with the law, but I think there are several refund related circulars which are definitely giving greater benefit as well to the taxpayers. So yes, and again, when I have to talk about chartered accountants, I think for tax professionals, refund is one area which has always been giving ample opportunities to support and to service the clients. So with that note, let's directly get into the intricacies of what we are going to discuss today. So as I said, it has been 8 years, so we are no more in a phase where we need to discuss about what is GST refund all about and what are all the kind of refunds which is available with payment, without payment, ISD. So we are not going to touch upon any of the basics, how to file the refund, etc., etc. We are directly, as the topic rightly says, we are going to directly hit on the issues which would mean intricate issues which are there in GST law. And the second part would be the court decisions. There are several court decisions which has come in the matter of GST refunds. So these would be our area of focus for today's session, right? So some of you, if you are very new to GST refund, if you are expecting ABCD of what is refund all about, please excuse me. This may not be the kickstarting platform, but if you are someone who is looking for some of the fundamentals of refund, the way in which refund as a concept has evolved, the way in which it has been always prevalent in the previous erstwhile law as well, and the foundations of these kind of concepts, then yes, this is definitely something that you can look forward, right? So now, how are we going to flow with this particular session? To begin with, I would call it this way. Let's get into the fundamentals of the refund. You may find it little theoretical, but trust me when I say this, we are going to start with some of the settled principles, and then we will slowly move on to some of the recent happenings which has taken place in the GST domain, and then we will analyze upon lot of recent decisions. When I say recent, less than a year. Okay, so these are the kind of decisions which has come up in the recent years. So if you go through this flow, you will actually be able to understand and appreciate that the past, understanding of the past is extremely important to understand as to how the future would operate. In fact, any kind of decision which has come up in the last 2 years on GST refunds, I was always able to reflect on my thoughts, go back and connect with some of the settled decisions in the past regime as well. So the concepts are, verbatim same. GST refund as a concept is nothing is new. Especially, I would say the one important new aspect, if at all, the new category of refund which has got evolved in this GST law are rather two categories. One is the inverted duty structure, which was not greatly prevalent in the previous pre-GST regime. The reason being, only after the introduction of GST rates, there were a lot of parity between, what is the rate at which you purchase, sell, and what was the erstwhile regime tax rates compared to it, what is the current tax rates. So because of these kind of matters, inverted duty structure definitely is was one thing that is having a great difference as compared to the previous regime. The other area I would call it as the headwise changes, where you have paid CGST, SGST instead of IGST, because these kind of matters were never there in the erstwhile regime. So except for these two, when we talk about export of service, export of goods, or deemed export, whatever you call for, most of the taxes, payment of tax, every single thing was prevalent even in the previous regime as well. So this apart, let's keeping aside the type of refunds which are there, even if we have to look into how the refund as a function performs, how, what are all the circumstances in which refund can be claimed, what are the circumstances in which refund cannot be claimed. So these are matters, I think, it's completely the same as to how the previous law was functioning as well. So it's very important to understand and appreciate some of the settled principles and settled law even in the previous regime as well. So we are going to evolve through this journey. I'm sure by the end we end this, you will understand why it is important for someone to understand the past, live the present, and extrapolate the future. The reason why I'm saying this, especially when it comes to refund, is that you have two major challenges. Either you apply for refund and then it gets rejected, or you apply for refund and then it gets sanctioned. In both the cases, I would say taxpayers are at risk, because even if it gets sanctioned, there is always a possibility that it's going to come back to you in the form of erroneous refund or whatever it is. And even if it's not getting sanctioned, obviously it's going to get into some kind of litigation. So when we are advising on any kind of starting with some basic refund possibilities to any kind of advanced refund strategies, it is very, very important not just to understand the law, not just to understand the procedural aspects through the circular, but to understand every possible future litigation, current litigation, and the way in which the past litigations have got settled. Because unless somebody is able to foresee, today I'm going to make a refund application RFD 01, what would happen if this matter has to travel up to Supreme Court? So unless I'm able to judge those kind of risk analysis, it's very difficult to play with the numbers, because they are not just numbers, rather the real cash involved in each and every business, right? So with that note, let's, the broader highlights of what we are going to discuss today would start with, principles of unjust enrichment, time limitation issues, and some of the 9610 related, I think the most wanted end of a particular saga, Rule 9610, and the entire background related to it, issues around inverted duty structure, because, these days, as I said, since predominantly we have got by far settled with the export related challenges. Of course, yes, export of services, we still have challenges, and export of goods on exception situations are still there. But then, the inverted duty structure is one area where we time and again have several challenges and various court decisions. So when I say court decisions could be of any kind of matter, including time limitation, SEZ, or the ISD exports, etc., etc. Right. So this is broadly we are going to discuss on all the issues. Purely, we are directly going to hit on the issues, right? So the first and foremost concept, if you are touching upon anything in refund, whether you are a taxpayer who is going to get the refund or you are a tax consultant who is going to help in getting the refund, most of you would have started with understanding what is RFD 01, how to apply the refund, and what is the formula behind it, and how this refund application will get processed, what are all the forms behind, and what the circular 125 says. If I may want all of you to just take a pause here, because this is not what refund is all about. It's very important to understand some of the basic concepts and basic principles. The topic of refund in any court or in any litigation or in any stage cannot be touched upon without having a reference to this particular most important 9-member judge decision from the Honorable Supreme Court, right? It's very rare that 9 members come together, so that makes it very clear the extent or the depth to which these matters have been analyzed. So quite obviously, it all started with a 3-member judge, and then 5-member, and then 7 members, and then 9 members. So to that extent, the matter has been again and again, revisited, analyzed, and then the most possible accurate decisions have been taken by the Supreme Court. So that makes it very clear that these kind of decisions are laying foundation. It's like, how you have Gannon Duggarly as the mother law for, works contract. Very similarly, I would call, if anybody wants to understand or understand the depth or master everything about refund, you must have some very good solid understanding in this, Mafatlal decision, right? So what is this all about? I'm not getting into the decision facts and other things because it's not something new. It is a well settled decision. It's not something new. But for us to even before get into the decision, there are certain basic principles which we have to understand. Yeah, yes, sir. Sorry, screen is not visible, is it? Is it any better now? Is the screen better now? Just want a
Oh,
confirmation.
actually, some blurred thing, some blurred strip is coming.
Okay, I'll do something. I'll just, stop the screen sharing and share it again. Will that help?
Yes, ma'am.
I hope it's better now. Okay. Is it better now, ma'am? Is this clear?
Yes, ma'am, it's better, but it's not gone. When the
Oh, it's not gone.
blue strip is not gone.
I'm not sure what could be the reason. Is this okay, ma'am?
So it's the same situation, but still better from the
Okay.
earlier. Let's
Okay.
continue.
Yeah, fine. So the fundamental principle when it comes to refund, if there is one concept that anyone must be aware of, is the principle of unjust enrichment. Some of you may be wondering, why are we discussing about these things? Somebody told me issues, court decisions. Why are we just, talking about the concept? I'm pretty sure, 100% sure, the court decisions that we are going to discuss, these kind of Supreme Court decisions that we are going to discuss, it will make you correlate, understand, and connect as we come to the present. if you read many of the current days judgment, you'll be able to still correlate back to those kind of mother judgment. So I would call it as the mother judgment. Anybody, as I said, is going to, is wanting to master in GST must know this kind of mother judgment. Okay, so what is this concept of principle of unjust enrichment? Basically, every taxpayer who is requesting for refund of a tax should prove that he has not passed on the incidence of tax to the other person, right? Because if you have passed on the burden to the other person, which means you are getting double benefited. You have already, passed it on to the other person through which you have earned that money. And on top of it, you are also expecting the revenue to refund you this number. So this is a very, very fundamental purpose. If someone wants to get refund in any of the tax law, it is very important to prove that I have borne the incidence of the tax. I have taken the burden of the tax. So only if I am able to prove this, it is possible for me to get the refund, right? So every assessee seeking refund of any illegally recovered tax. So, whether you call it as, even in the situation where you want to say that this number has been illegally recovered from me, even if the court agrees that yes, this is an amount which has been illegally, collected from you, still you have to also satisfy the test of why this money should be refunded back to you. So the court may agree, or probably the adjudicating authority may agree, that this money has been excess collected by you. No doubt. It has been excess collected from your hands. But prove me that you have not yet passed on the burden or the incidence of the tax to any other person. Here you have to carefully note that to the customer or to any other person, which means what? It's not only to your customer, but it should be through the entire supply chain. For one who has passed on the burden would not be entitled to the refund of money himself. This is a simple underlying concept of unjust enrichment. This principle has been always there in the legacy law, and that continues in the GST law as well. Okay, so a benefit which has been obtained from the other person, not intended as a gift and not legally justifiable, for which the beneficiary must make restitution or recompose. Okay, so these are some of the basic principles. Now, what has happened in 1989 from a very important judgment emanating from the Bombay High Court is that there was an incident where the tax was due for refund, but then the principles of unjust enrichment could not be satisfied by the taxpayer. So basically, what the authority is convinced that yes, this particular situation, you are eligible for the tax refund. Having said that, you have already passed on the instance to another person, and hence you are not eligible to get the refund. So, in this kind of instance, the court has suggested that for these kind of refund due, it should be transferred to the consumer welfare fund, which will be used for the welfare of the consumers. Instead of paying it to the supplier, in these kind of instances, where see, obviously, it is a situation where the tax has been excess collected by the state, excess collected by the revenue, which means what? This illegal tax cannot be held by the government. At the same time, it is not possible to refund it back to the. Yes, yes, sir. Is it okay now?
Yes, ma'am. Now it's perfect.
Okay, thank you so much. And how should I come back? That also you may have to send it. Thank you. Okay. Uh, so as I said, the court has suggested to form this kind of consumer welfare fund through which the incidents, whenever, it's neither possible for the state to hold this money because it's not collected, it's collected without authority of law, it's an illegal tax. Basically, it's not even a tax. This money should not even have been recovered from the taxpayer. But on the other hand, if you go back to the taxpayer has already passed it on to the next line and he has already, got enriched out of it. It is no more that he is suffering the tax burden. So we are at a stage where it is neither possible for the revenue to retain this money nor possible for the supplier to actually, get this money as refund. In those kind of situation, there is a midpoint where yes, this money basically, when I say that he has already passed on, where is that he would have passed on? All these tax costs would have been passed on only to the end consumer, right? So on those lines, there was a proposal to create a consumer welfare fund so that whatever has been ultimately excess collected by the from the consumer, that goes back to the consumer by way of this kind of welfare, consumer welfare fund. Okay, so this is a fundamental concept. On these lines, the customs law has set up this kind of consumer welfare fund in 1991, and then the same matter just continues in GST as well. So this is broadly the understanding. So it's very important that sometimes it's not just about arguing your case to say why a refund is due. It's also important to say why the refund is especially particularly due for you. So both these are very important elements when it comes to the refund matters, right? Now, moving on, the important landmark decision which I was referring to from the Honorable Supreme Court, it's a nine-member judge decision, out of which, in fact, with a majority of 8:1. In fact, it is not purely 8:1. The way in which it has evolved is that, it was 5:4. But then out of the four, which was in the minority, three judgments were more closely aligned with the majority five decisions, and hence it actually turns out as if it's 8:1. Okay, so it lays down the majority 8:1. There are two important aspects. The two mainstreams of this judgment is right to refund, remedy for refund, right? So these are the two concepts which are being discussed. This is a very, very, very important decision. In fact, it's a bit tricky as to how you read, decipher this decision. Okay, it's a very lengthy one. On the other hand, it will be a bit confusing because there are multiple judges and multiple decisions which are involved in it. You may have to understand, decipher. It's not just about reading. It's about, first of all, deciphering even for you to understand how, as to how to read it itself. Okay. So the decision basically talks about what rights and remedies are available to the taxpayer against the state, especially in the matter of refund of unlawfully recovered taxes and impost. So the two aspects are right to refund and remedy for refund. And specifically when it comes to this, right to refund, end of the day drills down to unjust enrichment. Do you have the rights to claim the refund? That is exactly the point. But the second limb of it, when it comes to remedy for refund, is where it is split into three major categories. This is a very, very, very crucial aspects. There are, as I said, this is very important as to understand some of the ways and means in which refund can be obtained in a not a regular transaction, right? So not always your transaction or your case scenario could fall into a just a methodical manner. And in fact, I'm pretty sure if it's a straightforward case, most of you may not even have come to this kind of session where we are talking about issues. So most certainly you may be having issues, and it's very important as to how to understand and analyze the issue. So here, when it comes to remedy for refund, what kind of remedies are available? There are three type of scenarios which has been discussed in the particular decision. One is unconstitutional levy. When the levy itself has been held unconstitutional by the court, then it is no more a tax. You cannot even call it as a tax. In which case, it is just an amount which has to be given back to the taxpayer. Here, the refund is completely outside the provisions of the GST Act, or when I say not just GST Act, whatever be the governing statute, and this gets governed purely under the Limitation Act 1963, Section 17(1)(c). So, what is important here? Let's say, for example, this has a very important significance even in the case of Mohit Mineral, right? So, our famous decision in GST law on Mohit Mineral, where the ocean freight has been struck down, where the GST on ocean freight has been struck down. I know, followed by it, there were several taxpayers who have actually paid this, RCM under for ocean freight prior to this kind of judgment, which has emanated from the Gujarat High Court. And then what happened is that these refunds were rejected. Particularly, they were rejected on the time limitation, because your time limitation under GST law is only 2 years, whereas this is time barred, refund, and hence this cannot be refunded. In fact, you may refer to one of the court decision in the case of Conso Energy, which has also again emanated from the Gujarat High Court, where exactly this Mafatlal principle has only been, applied to say that when the court has very clearly struck down the RCM on ocean freight, holding that this is an unconstitutional levy, hence whatever money that has been paid towards this is refundable, not even under the GST law. It is no more a refund under GST law section 54. It is clearly an amount which the state is supposed to give back to the taxpayer because it's a levy which has been collected without any constitutional validity. And hence, the time limitation is not 2 years from the date of the transaction, rather, it would become 3 years from the date on which this has been held to be unconstitutional levy. So only the date on which it has been held to be an unconstitutional levy, the levy fails. And at that point of time, it takes the color of the amount which is due for return. Under the limitation law, the time limit is 3 years. So any kind of claim that has to come within the 3 years from the date on which it has been held unconstitutional, this has to be accepted. In fact, one can also go up to the level of taking a different kind of decision where the High Court decision would have come at some point of time, but probably after 1 or 2 years down the line, only the Supreme Court decision would have come. So you can even take a stand that it is only when the Supreme Court decision has come, this has turned out to be an unconstitutional levy, and from there, it is 3 years. In fact, one step ahead, one can also say that post Supreme Court decision, let's say even in the case of this, even in the case of this ocean freight. Post that, amendments were being made in the notification where the government has accepted, yes, we do accept this Mohit Mineral decision. We are not going for any kind of further, review petition. And then they went on to make the amendment in the law. One can say that the date on which the amendment has been made is the date on which actually it has been accepted to be unconstitutional, and from that point of time it can even be calculated to be 3 years. So these are some of the ways and means in which the refund could even go outside the limb of GST law, though the matter actually pertains to GST refunds. The next limb of this illegal levy, basically, so tax is collected by the authority, but here it's not held to be unconstitutional, but it has been collected due to misconstruction, wrong interpretation, incorrect facts, etc. In these kind of scenarios, refund is governed only under the governing statute and not based on the Limitation Act. And in those kind of situation, it is very important to even make a separate refund application. Remember, in point number one, it's an unconstitutional levy, and hence there is no question of even refund application. You don't even need to file RP01. Directly, you can go for writ petition, and through the writ court will give you the direction for return of this particular amount. But when it comes to illegal levy, it is not possible for you to directly go for the writ petition. It is very important to have cause of action, and for which refund application has to be made. So refund application is the only route in which illegal levy, or wherever there is a wrong interpretation or incorrect facts because of which the tax has been wrongly paid, those kind of situations probably will get, just to give my understanding, I am not quoting any court decisions or anything on these lines because it's only just for a reference sake, right? You can probably say that in the case of interest. Okay, interest, there were some confusions as to whether it is 24% or 18%. Then came the clarity whether it has to be paid under cash or it has to be paid based on credit also. So it should be on net or gross, how it has to be calculated. Rule 88B came only at a later point of time. So these are, some of the matters where I would not say, there is nothing to call that this was collected as an unconstitutional levy. But probably these some kind of mistakes might have happened as to how one would have calculated the interest. And at a later point of time, when it has been made very clear as to how this has to be calculated, there would have been abundant clarity. At that point of time, only at that point of time, there was a clarity as to how this has to be calculated. So anything which was previously collected could have been, or probably that can be viewed as an illegal levy of interest. So on those lines, one can get covered under this particular, category. And probably, my opinion, from the date on which the amendment has been made, yes, though it has been a retrospective amendment, the fact that it is a retrospective amendment, that itself makes it amply clear that this was an incorrect way of understanding of the law by all. And that's the reason why rules like 88B has to evolve, and then this illegal and then this illegal calculations are to be done away with, and proper mechanisms were being established for interest calculation. I'm just giving you one reference. Okay, you can probably extrapolate this to whatever kind of scenario that you may have, because I'm sure GST law continuously has some or other amendments which are happening. In fact, in some of the amendments, it's very clear that the GST Council meeting minutes are also on page to say that these are because of wrong interpretation. There is a confusion that exists in the industry, etc., etc. So in these kind of scenario, you can probably get yourself covered under this illegal levy. And then from the date on which this comes to a clarity, if at all there is any excess tax which you have paid in the past, one can go for refund application in those kind of scenarios. The next question, as we talk about it, many of you may be thinking, what happens if I had some kind of classification dispute and then at a later point of time I got a clarity that instead of 18 percentage, no, it's not even required. The GST Council has also explicitly told that this is not 18 percentage. It comes under 12 percentage. Now can I go back and get the refund of that 6 percentage? Remember very very carefully, in these kind of situation, unlike the earlier example which I gave on interest scenario, interest, nothing was mentioned anywhere in the law to explicitly state that because of these kind of errors, I'm now giving you a clarity that this is the way in which the interest has to be calculated, and this is what Rule 88B states. Nowhere in the law it says that anything excess which has been paid in the past on a different calculation, no refund is possible. Those kind of wordings are not placed anywhere in the law. Okay. So there is no such restriction which has been placed in the law. But having said that, if you see many of the classification related disputes or confusions which has happened where the council has come up with a clarity, most of the time what we find is that they also come with a very clear radar that anything which has been paid in the past in excess will not be refunded. And newly they have evolved this wording like as is where is basis settlement, which means what, if you have paid something less in the past, we don't recover from you. If you have paid something excess also, don't come back to me for refund. But is it right to to have those kind of aspects in the law? Because what would have been otherwise an illegal levy cannot be painted to be a legal levy just by including a clause that, if you have paid something in excess, I will not give you the refund. So, but if at all my intention is to question on these lines, it is not possible for me to question just by sitting in my room. It's very important that you need to pick up a case in hand, and that has to travel up to the Supreme Court, if not at least up to High Court. So very carefully, one may have to make a decision when it comes to these kind of matters on refunds. Be very clear on the risk appetite, because it's very easy to say this is what the court decision says and hence this applies. But what is important is, just imagine something like this, Mafatlal Industries. Imagine the kind of levels of litigations which would have happened. It all started with today people are worried about even show cause notice. And imagine these kind of matters would have emanated from the show cause notice and then the adjudication order and first level appellate authority and then the ITAD tribunal, the tribunal, and then you have to go to High Court and then you have to go to Supreme Court. Doesn't get concluded even the Supreme Court. And then from there, one member judge, three member, five member, seven member, nine member. So that's, that is something, it's a legal battle. And even despite doing all these things, today we are seeing that the government comes back to you stating it could be a retrospective amendment. So I'm not discouraging the litigation here, but all that I want to tell you is be very, very careful when you take a position. It's very important to understand whatever is the risk that is involved in that particular position, and one has to battle his own case. This is a very, very, very important aspect, even that has been insisted in this Mafatlal decision as well. So now coming to the third limb, it could be because of mistake of law, right? So what is this mistake of law? You ended up paying a tax which you were not even legally obligated to pay, and which you are coming back seeking refund at a later point of time. This clearly falls within the meaning of Section 72 of the Indian Contract Act. But having said that, this also has to be taken through the refund application only, right? Now, unconstitutional levy will get covered under limitation law, and hence one need not even go for a refund application under the GST law. But having said that, when it comes to illegal levy and mistake of law, one may have to go through the refund application, and which means quite obviously the time limitation also, that the time limitation is 2 years from the relevant date, right? So the time limitation under the GST law also will be equally applicable on the illegal levy and mistake of law. So you may have to very carefully differentiate whether your case falls under unconstitutional levy or illegal levy or mistake of law, especially in all those kind of cases where the tax has been already paid and then you have to go behind for the purpose of refund, right? Now, the next important part, how is this principle of unjust enrichment incorporated into the GST law? Very, very interesting. Okay, this is again fundamental, but it's always important because, as I said, many of you would have just gone ahead by, with your refund understanding, starting with how to file RFD01, how to make the refund computation, what are all the documents to be submitted, who is the jurisdiction officer, and then how to get the, what are all the forms in it. But that's not the end of it. What is important is to read the provisions and appreciate the way in which these provisions have been incorporated into the law, the sequence or the flow in which it has been emanated. So the principle of unjust enrichment, if you see section 54.4, it's very similar to how, 155, section 155 is where the burden of proof when it comes to input tax credit falls only on the taxpayer. Very similarly, when it comes to refund, the burden of proof falls only on the taxpayer to prove the principles of unjust enrichment, right? So the section 54 4 clause B, it says such documentary or other evidence, including the document, whatever it is, as the applicant may furnish to establish that the amount of tax and the interest, if any, paid on such tax or any other amount paid in relation to which such refund is claimed was collected from or paid by him, and the incidence of such tax and interest has not been passed to any other person. Here, see, very important point is at least you can try and demonstrate for tax, but how do you call for interest? Because interest, it obviously gets into your cost, right? The moment it gets into your cost, how do you say whether, so there are two ways to look at it. The fact that this is in my cost, meaning that I have absorbed this expenditure on me, I have not yet passed on. But the other way in which one can also look at it is that the interest is already taken as part of your cost, which means you would have considered it as your cost even for the purpose of your pricing. So there are two ways in which this can be looked at. Okay, but having said that, the important point for you to here note is to any other person has not been, the law does not say had not been passed on to customer, has not been passed on to recipient. These are not the words which has been used, has not been passed on to any other person. So what is important to here is the entire supply chain. Nobody should have passed on this kind of tax incidence to anybody. You should have only suffered that particular tax incidence for you to get the refund. Now we are not talking about anything hi-fi. I'm exactly talking about the cases where, as chartered accountants, also we are giving the certification for refund. The certification, whatever that is being sought from a CA or CMA, is nothing but a certification only to prove that the principles of unjust enrichment has not been, or rather has been properly complied with, right? Now, let's also understand the importance of this unjust enrichment as to how it has been placed in the law. If you read section 54.5 and 54.8, the law does not say that these are the scenarios where you will be anyway eligible for refund. It's very interesting the way in which it has been framed is that by default, section 54.5 says that by default, any refund that goes only to consumer welfare fund. And the exception has only been carved out in subsection 8, which means what? It's not that you get refund by default, and if you fail to prove it, it will go back to the consumer welfare fund. No, it's not that way, it's the other way. By default, the provision says it will go to consumer welfare fund, and only in the exception it will come to the taxpayer. Now, what are those exceptions? But exception is very clear, it has been very strongly laid, and it also has the notwithstanding clause. Okay. But what are those exceptions? These are the exceptional situations where you need not worry to prove whether the incidence has been passed on or not. What are those exceptions? First of all, export, right? Export, it's impossible for one to determine whether the tax amount has been passed on or not. And again, exports are those where the goods or services are going outside India. So export is one scenario. Refund of unutilized credit. The fact that this credit has been availed and unutilized and it is sitting with you in the form of asset itself establishes that this is a money which you are, trying to liquidate. This is an asset that belongs to you, and hence this refund belongs to you. The third category is tax paid on a supply where the supply itself has not been provided. Invoice not issued, or those cases where invoice has been issued, it has been followed up by a refund voucher, right? So this is another scenario where tax has been paid, but the refund has not been issued. Interestingly, there were several such cases which were there, especially during the COVID times. The money would have been collected on advance basis, on the advance tax would have been paid, and then, it is not possible to provide the supply, and then the transaction gets cancelled, right? So in fact, the CBIC also has also come up with the suitable clarification circulars on these lines, and the law has also got amended to very clearly, explicitly say that the unregistered persons can also get refund in these kind of scenarios. Okay, so these are some of the matters where it's undeniably one can get the refund. The next category is refund under section 77. It's very clearly the wrong hit where it's IGST, instead of IGST you paid under CGST, SGST, or vice versa. In those kind of cases, it's very clear that you have only paid the tax under the wrong head, and then there is no question of passing it on to another person. Yet you are going to repay the tax out of your pocket, and then that is what you are going to get it as refund. Okay. The next last one is nothing but where the incidence of such tax and interest has not been passed on to any other person. So which means, except for these four categories, any other category, if at all you want to, the supplier or the applicant should basically get the refund of the tax. It is very important for them to prove that the principle of unjust enrichment has been complied with. If not, the money goes back to the consumer welfare fund. The officer can probably sanction the refund. You may be eligible, the transaction may be eligible for the refund, but if you are not able to prove that you have not passed on the incidence, then the money will only get credited to the consumer welfare fund and not to the applicant. So, as I said, the principle of unjust enrichment, it is not only about your own customer, it's about the entire supply chain, right? So, this is again a very famous Supreme Court decision from the erstwhile law, which still holds good even in the current, GST regime as well. The taxpayer is entitled for filing. I'm just, reading the way in which the law, the court decision has come. The taxpayer is entitled for filing a claim for refund on the basis of credit notes raised towards turnover discount. This is again one of the common, matter which could be there for many of the, especially the distribution segment. It could be there for automobile industry or home appliances industry. The concept of turnover discount is very commonly prevalent. The provisions regarding refund of duty under a central excise is not limited to immediate buyer, but can be claimed by ultimate buyer on proof of incidence of such duty, not being passed on to any other person. There is no material brought on record to show that the buyer to whom the incidence of duty was passed on by the SSC did not pass it on to any other person. There is a statutory presumption that the duty has been passed on to the ultimate consumer. So by default, the statute assumes that always whatever is the duty that has been paid, that duty component has been already passed on. The burden has been already passed on to the ultimate consumer. It is clear from the facts of the instant case that the duty which was originally paid by the SSC was passed on. The refund claimed by the SSC is for an amount which is part of the excise duty paid earlier and passed on. The SSC who did not bear the burden of the duty, though entitled to claim deduction, is not entitled for a refund. He would be unjustly enriched. The word buyer cannot be restricted to the first buyer from the manufacturer. So very, very, very important on these lines. And very interestingly, even if you note down, it says that the provision regarding refund is not limited to the immediate buyer but can be claimed by the ultimate buyer also. This is again very important aspect, which has been very clearly laid down even in the Mafatlal decision or followed by these kind of Addison decisions. Is that it is not always required that only the supplier should claim the tax, refund. Even the recipient can also claim the refund. For instance, under GST law, we have an ongoing dispute which is there in the Gujarat High Court. Already, the cases in favor of the taxpayer, and we are awaiting the next level understandings from the Supreme Court as well. This is for real estate. Real estate, there is an ongoing dispute or an ongoing challenge. The law says one third is the standard deduction towards land value. But the common issue which has been time and again raised by the taxpayers is that how do you tell me only one third? Because there are several projects where it is two-third which is belonging to the land component. It's only one third which is the building component. So in my project, if I am able to very clearly demonstrate that this is what is my land value, and this land value for me to substantiate, there are also the stamp related matters are also there. I'll be able to very well say, yes, this is the actual land value. And then this is the building value. When I am able to very clearly give you these are the actual numbers, Why should the law be assuming a different number? So this is a very common dispute. But on these lines, from Gujarat High Court, there is a very important judgment, Munjalal Manish Pai. In that particular decision, it is not the builder or the developer who is fighting the case, but rather it is the actual consumer who is the actual, buyer of the particular constructed property who is only fighting the case. So this kind of litigation by the person who is not the actual taxpayer, but the person from whom the tax has been collected, in this case the recipient, can also fight this matter because the incidence of tax has been borne by him. So let's say a simple example here, the builder or developer is not ready to handle the case. He is, he thinks, why should I be handling this litigation? I want to focus only in my business. You just give me the tax, let me go and pay it to the government. Now, the it is the recipient who is actually fighting the case, applying for refund, give me back the money which has been paid in excess, and hence am I eligible? Yes, I'm eligible. I'm entitled because this is paid illegally, right? So all I want to tell you is that when it comes to refund, it is not always only the supplier who can be the claimant of the refund. It can be any person who has actually borne the incidence of the tax. Now, again, though we have been discussing on some of the legacy decisions like 1989, 1996, I just want to re-insist. Imagine the level up to which these matters are still continuing in the GST law. As I said, it has been 7 to 8 years of GST, and in this particular financial year, 2025, in this Union Budget Finance Act 2025, there is an amendment which has been made in the credit note. Section 34, this is again in relation to the concept of principles of unjust enrichment. As you all may know, credit note is also in fact a form of refund. Just like how you apply and take the refund, credit note is a self-refund, right? So I have made a tax liability which is X, but then I determine it should be X minus Y. So that minus Y is what I'm going to take it as credit note. So instead of me going behind the officer for the purpose of this refund of Y component, let me take it in the form of, let me give it in the form of credit note to my customer, and then I will take the tax liability reversal as well. This is exactly the concept of this credit note, right? So just like how we have the concept of principles of unjust enrichment in the refund, a very similar concept is already there in the case of credit note, but understand that even today this has gone into further amendment. The proviso in the credit note, section 34, it says that provided that no deduction in output tax liability of the supplier shall be permitted if the incidence of tax and interest on such supply has been passed on to any other person. This was already there. On top of it, they have further amended by removing this particular proviso, by inserting this revised proviso to say that provided that no reduction in output tax liability of the supplier shall be permitted if the ITC is attributable to such a credit note if availed has not been reversed by the recipient where such recipient is a registered person. Can someone able to connect this point with something which has been happening in the last 1 year? Any quick thoughts? I hope I'll be able to see the chat box, right? If I get any responses, will I be able to see it in the chat box? Impreet?
Chat box is active.
Yeah. No, so if participants are going to respond to the query, will it be, available in the chat box? Is it possible for participants to respond through the chat box?
Yes, ma'am.
Okay, fine. So I just want to, ask here to everyone, can you connect this with something that has been happening in the GST return filing over the last 1 year? Some of the latest happenings? Impreet, I have actually not received any responses in the chat box. I don't know if it is
No, I
because of
don't think chat box
some,
is working as of now.
or
Question
I don't know
answer
if nobody is responding.
link
Oh, maybe
will
in
be
the
working.
Q&A, is it? Okay, it goes to the Q&A box. Okay, fine. Yeah. So I don't think I have the immediate access to the Q&A box. Let me just check that. Because I have been talking for a long time, so I just thought let me get some understanding on the participants' interaction as well. Just a minute, let me just open my Q&A box also. So I have to access in the questions, right?
Only question answer they can put.
Yeah, yeah. Okay, so it's predominantly it's the questions which are flowing here. So I don't think the chat box is, yeah, yeah. I think I have got a few responses. Yes, I think Peenal Shah. I've got some response. Yes, it's IMS. Arvind. Yeah, correct, correct. So I think we are getting the responses. Perfect. As you all rightly said, it's the it is the IMS system where they are trying to interconnect. Okay. So it is the IMS system where this is getting interconnected to say that section 34, when we say that whenever a credit note is being issued to a customer, at that point of time it is very important the recipient should have reversed the credit. So now how do you ensure whether he has reversed the credit or not? This condition was already there even in section 15.3. Also this condition was already there, but the greatest difficulty is that though the condition was not there, there is no actual compliance mechanism. There is no provision or there is no mechanism which has been prescribed as to how that condition can be complied with. But after the introduction of this IMS, one of the key feature that has been brought is that a credit note will get either accepted or rejected. It cannot be even kept pending. So it has to be either accepted or rejected, and that becomes a mechanism as to how one can establish that this particular condition under Section 34 has been complied with. But this is one thing that taxpayers should be very very careful about when it comes to issuing a credit note. So if that gets rejected, quite obviously this amount will get added back to the in the hands of the supplier. In fact, we have one just to highlight one of the common issue which is there is that when it comes to ineligible credit, right? Where they have already reversed the entire credit, or let's say if there is a credit where the supplier has not even availed it in the first place. Okay, for the recipient has not even availed it in the first place. Let's say it is because of the ineligible credit or whatever it is. Now do you think they will be ready to accept the credit note? Because accepting the credit note will result in reversal of credit in the hands of the recipient. The recipient may not be interested to accept the credit note, and then they will end up rejecting it. In those kind of scenarios, it will come back in the hands of the original supplier. So this is something that you have to be very, very careful. But the point here is, all I want to insist upon is understand that credit note is also one of the mechanism of refund. But having said that, here also the principles of unjust enrichment is equally applicable. So even in the case of unregistered person, the incidence of tax on such supply has been passed on to any other person. So basically, this is again something that needs to be proven whether it comes to B2B or B2C transaction, right? So is the importance of this particular concept. So, there are a couple of decisions as to how this can be proven. What happens in the case of, price variations? I'm not picking each and every case, but I just want to highlight that, refer to some of the SESTAT decisions. SESTAT decisions would be very, very helpful in terms of how you actually handle these matters in the GST law, right? So whatever that I have given you as SESTAT decisions, if you say, for example, there is a recent SESTAT decision in 2023, which is again a refund in the case of downward price revision. So what happens in the case of very similar to credit note, let's say it's a downward price revision, the excess payment initially paid by the company, and then there is a downward revision. The department argues no, the principles of unjust enrichment has not been complied with, and then the taxpayer has to fight the case to basically state that the refund of excess tax paid on the downward price revision is very clearly available. It is not hit by unjust enrichment. It is on one to prove that the principles of unjust enrichment has not been violated. So most of the times, a CA certificate would be definitely helpful. In fact, a very interesting decision is, I think it is in this flow tech power, if I'm not wrong, where the department went to the extent of saying, I will not even consider the certificate. Even if you give me the consider, the certificate is not the basis. I will not rely upon it to accept your unjust enrichment. So again, there are court decisions which clearly say that these kind of certifications should be accepted. But does it mean the officer should not verify? No, the officer has, very good power to verify whether the principles of unjust enrichment has been violated or has been complied with, whatever it is. The officer has every right to verify that. But the only point here is he cannot abruptly reject a CA certification. That is the point here, right? So the officer may have his own separate findings which could be different from that of what is there in the certificate, but without having these kind of actual groundwork, one cannot simply say, so I cannot accept your refund just because you have a certificate. I will not consider the certificate. So these kind of matters cannot come up. Okay, so there are some identical cases where these kind of matters have come up time and again, but then most of these decisions are in favor of the taxpayer only. So I'm not getting into each and every case for want of time. Again, the other important decision is cum duty calculation. Okay, cum duty calculation is again one area. See, because it's a very peculiar and an exceptional transaction. What would happen? Let's say, for example, the contract says that the whatever is the price that is inclusive of tax. Okay, and then at a later point of time, the supplier gets to know that he is supposed to pay the differential tax. Okay. Now, after paying the differential tax, if at all, he has to go back. When he is asked to pay the tax, what he has done is that anyway, my contract is inclusive of tax. And since my contract is inclusive of tax, whatever is the total price that has been agreed upon, that becomes the price inclusive of tax. Let's say, for example, if it is 100 plus 18, whatever is the price that is agreed upon as the total contract value is equal to 118. So I will reverse work to calculate what is the tax amount, which is 18 by 118, right? So this is what we call as cum duty calculation. So this cum duty calculation has been made by the taxpayer to discharge the taxes. Why he has done so? It is because that's how the contract has been. The price is all inclusive, inclusive of all the taxes as per the contract. So it is not possible for me to go behind the recipient, and hence I am, taking it as part and parcel of the contract, and this is how the tax has been discharged. Now, when it comes to the refund, what has happened is that the department rejected the refund, stating that the fact that you have made it as a cum duty calculation itself makes it clear that the insurance of tax has been passed on to the customer, because this is part and parcel of the contract value, and hence I will reject your refund, right? But this matter has been actually held in favor of the taxpayer, wherein the Kolkata Sistat has told that just because it is a cum duty calculation, it cannot be directly concluded that the supplier has passed on the incidence of tax to the recipient. He has actually paid out of his pocket, and hence he is eligible for the refund purpose, right? So, these kind of peculiar situations will definitely, they are bound to come even under the GST law, because, right now we have assessments, right now we have inspections and etc. going on. So at some point of time, if the taxpayer decides to pay some tax on a cum duty calculation basis, and then let's say if at all that has to result in some kind of inverted duty structure, and then you want to go on refund. So those kind of scenarios, one cannot directly come to a conclusion. The only point here is that just because something is a cum duty calculation, that does not mean that the tax has been collected from the recipient. It's only a calculation purpose. That doesn't mean the incidence has been passed on. So the next one is, pre-deposit. See, pre-deposit is one area where, typically how it used to be in the erstwhile law is that once the case is in favor of the taxpayer, the refund of pre-deposit is automatic, which is probably you may have to, submit a letter and then get the refund. So getting refund of pre-deposit never used to be a challenge in the pre-GST regime, but of late that is becoming challenge in the GST regime. Okay. Now, what happens is that technically a refund of pre-deposit is not actually, a refund which is emanating from the court order. There is also a particular, category which is available in the refund based on refund order. But technically, that is not relating to this refund of pre-deposit. That is altogether different from this. But unfortunately, what happens is that, many a times officers try to correlate between the two. And the other aspect is when it comes to refund of pre-deposit, in GST law, invariably we are in a situation where we have to make a separate refund application. So, is it required? Probably it is not required. But the point here is, once I have won the case, do you think a taxpayer will be, wanting to argue? Okay, fine. Now that I have won the case, you're supposed to pay me automatically. Why should I be making you an application? These kind of decisions taxpayer may not want to take. Most of the taxpayers will be like, if I make an application, I'm going to get that refund. So why should I be making a fuss out of it? Let me at least make the refund application. Okay. So the point is it a technical requirement? Is it a statutory requirement? The answer is no. But is it practically being followed? The answer is yes. Most of the times, once the matter has if a particular litigation is in favor of the taxpayer, if the matter is won, then whatever pre-deposit that has been made, separate applications are made these days. In fact, what happens is that if you get into this RFD 01, the pre-deposit court order also, I mean, not the court order, the order also sometimes you are able to get it in the Dropbox. Okay. So there you can probably apply and then you can get this refund of pre-deposit. But there are a couple of points which, one may have to understand practically is that for all good reasons, pre-deposit, there is no concept of this, unjust enrichment, etc., etc. But unfortunately, this is not very specifically carved out in the law. When it comes to pre-deposit, as part of, good practices, if I have to say, best practices which needs to be followed, always it is better to keep it as your asset in your balance sheet. Okay. The fact that it is in your asset will be demonstration of the fact that the insurance has not been passed on. It is ideal not to expense it off, because once you expense it off, department may probably take a position that this has been expensed off, which means it is added to your cost, which means it is already passed on to your customer. Okay. This is not the right decision, but this will invite troubles unwantedly. So I'm just saying, as a matter of best practice, it's always good that you park your pre-deposit amount in the balance sheet asset side and don't take it as your P&L expenditure. Okay. So even if the amount is small, sometimes it may happen, because if the amount is too small, we have the tendency to just, expense it off. So please do not do that part. Okay. So how this pre-deposit, the time limitation, typically pre-deposit should not even have a time limitation, because it's not a matter of refund. It's a matter of automatic restoration of the deposit, whatever that has been made in the original place. But having said that, yes, we all know everything will get correlated to the refund related provisions, especially when it comes to the time limitations, etc. So as per section 54, you have the 2 years of time limitation, but department should not take up some kind of innovative ideas to say that pre-deposit was made 3 years ago, but today only the final appeal order has come, which means it is already time barred and hence it's not possible to get. I mean, I'm pretty sure we are finding these kind of cranky or crazy ideas which are coming up at times. So this is not the way in which the pre-deposit time limitation has to be even made. If at all you have those kind of instance, you can always refer to this central excise, instruction which has come up in way back in 2002, which clearly says as to how the time limit has to be calculated for the purpose of pre-deposit. Okay. So this is, I have also given you a particular reference citation where even if it is taken on P&L account, it doesn't mean it has not been passed on. Okay. So these are some of the issues relating to pre-deposit. But again, when it comes to pre-deposit, there is a separate provision under section 115, which clearly said this, this has to be refunded along with the interest. But, we always know getting a refund itself is sometimes nightmare, but then getting interest on refund is an altogether different thing. But is it eligible? Yes, the answer is very clearly eligible. Any kind of refund of pre-deposit, that has to come along with 6% interest. It, of course, it's not 18%. It has to come along with 6% interest, and that has to be calculated from the date of payment of this amount till the date of refund of such amount. But what is important is for the taxpayer to ask for these kind of matters. It's not that the revenue will come and give it to you in your hand. You need to ask for your own money. So the next part is on, the time limitation related aspect. Okay, this is a very interesting and an important case. What happened is that when it comes to the time limitation, we have, I mean, I'm not getting into the facts of this matter because it will take us back to, some of the business of delivery services and then what happened, etc., etc. But the point here is that when it comes to time limitation, even though it was time barred, the recovery of amount without authority of law would violate the Article 265, and hence revenue has restrained from recovery. So what has happened is that the refund was given in the first place, okay, and then the department found out that no, this is a time barred refund, okay. But by the time they wanted to go behind the time barred refund, it was so much that the actual refund what has been given is because there is an error in the law. When there is an error in the law, which means the amount has been collected without authority of law. Okay. It's a very interesting judgment. I would say slightly they have gone over and beyond what the Mafatwal decision says, but then that's what is the High Court decision. It says that the recovery of amount, yes, is it a time bar refund? Yes, no denial. It is a time bar refund. But if you attempt to recover this time barred refund, what would happen is you are incidentally recovering an amount which without an authority of law. This would violate Article 265, and hence the revenue was restrained from recovering the tax because it's not even a tax. Okay, very interesting. Okay, so there may be instance where the court is ready to honor the refund even though it's time barred because it is not even a levy. The levy itself fails. Okay, so one may have to test this case. Again, I'm saying the principles on all of these cases, including that of Mafatlal, is that one must fight his own battle. That's exactly what I have replicated here also. So don't think, because somebody else has got, favorable order in some other case, today I will get the benefit. Today you will get the benefit only if you are having an ongoing litigation. So what is important here is you cannot be waiting to see what is going to be the litigation output of the other case. And until then, let me not even take this chance or risk. Let me not even go for litigation. If somebody gets the fruit at that point of time, I'll also go and pluck the fruit. It is not possible. Okay. If somebody is climbing all the way up to get the fruit, you should at least follow that person to also, get the fruit. You cannot be standing on the ground thinking that, what if I fall? Let him go, pluck the fruit. At that point of time, I can also just, get it from the ground. No, that's not possible. It's very clearly it has been laid out. He cannot also claim that the decision of the court or tribunal in another person's case has led him to recover them is is a takeoff law. Okay, so one must fight his own battle, which is a very, very important aspect when it comes to refund. Not only refund, I think when it comes to any of the matters, at least you should have an ongoing cause of action. You should have an ongoing litigation. Only then any kind of, let's say for example, now we have the safari retreat decision. Okay, so if I mean, I'm not getting into the retrospective amendment, etc., etc. Let us assume the safari retreat is completely in favor of the taxpayer. Can I say, okay, so 2020 or let's say 2019, I took a decision of not availing input tax credit on a particular major project which I was doing. And today Safari decision is basically in my favor. So why can't I go back and avail that credit? Had this been in place originally, I would have got the benefit. Can I now go and take the benefit? No, that kind of argument will not hold good. If you are aware that there is an ongoing litigation which is going on, and if you want to actually join the queue, at least you should have availed the credit. You should have continued to dispute. You should have been, your case should have been somewhere to say that, okay, refer to the decision. That's the reason that's what I am also doing, and hence the same is applicable for me. Okay. But what is important is one must fight his own battle. This is a very settled law. On a very similar line, let's say, for example, in the very recent Kerala High Court decision, it's a most of you would have come across. This was in the headlines. Once again, the principle of mutuality has been tested. It has been a time-tested concept. Whether you call it as Calcutta Association, whatever it is, this is a time-tested matter, and government is also particular. Whatever decision that you come up with, I will go back and do some or other retrospective amendment to somehow tax this transaction. Government is always particular when it comes to association. I want to somehow tax this transaction. And some of the taxpayers are always, going behind to say that no, this transaction is not taxable because it's basically a conflict of the principle of mutuality, right? What is the concept of principle of mutuality? It's nothing but the association and the members of the association are one and the same. I have an apartment. The apartment there are 10 people. The 10 people are coming together to put their own money to spend for the common purpose of themselves. They are not there to do any business, or they are not there to make any profit out of it. They are not there to do any of those things, right? The concept is simply the association and the members are not any different. They are one and the same. So since they are not mutually different, they are one and the same. So on these lines, that this has been a very recent important decision. I'm not getting into the decision because it's a bit of deviation from what we are focusing today. But all that I want to say is, let's say, for example, based on this, Kerala High Court decision, if one wants to say that, whatever that as an association I have paid as tax in the past, now can I go back and, get the refund, right? So again, the question of time limitation could be there. You need to fight your own case. It's not that the department is going to sanction you the refund. You may have to litigate on this matter. But the point what I am, trying to touch upon is that maybe you have a chances of trying to say that here the principles of unjust enrichment has not been violated because when I say that, association and the members are one and the same, association would have paid the tax collecting only from the members. Now that the association and member are one and the same, then whatever that has been paid as tax from the association, you cannot say that the incidence of tax has been passed on to the member. The incidence of tax by the association is nothing but the incidence of tax by the members as well, because association and members are one and the same, applying the mutuality of interest. Okay, so this is something. See, this is purely my views. I am not, here to say this is how the courts would view, but I just want to insist. First of all, the principle of mutuality, though, yes, we have the Kerala High Court decision today. To what extent this is going to be accepted? Because we have seen several attempts, several court decisions, which has actually turned up time and again. Court decisions are only in favor of the taxpayer, and time and again, government only wants to plug in the loop by way of some or other, amendment in the law. And still, we have to also see that the constitutional validity, those kind of matters are also still, these are matters where the litigation or the scope of litigation at a very high level are always open, right? So the only point here is, can I join the queue to expect some refund? Yes, you need to fight your own case. You can, probably see as to how the decisions are going to shape up in the future. So another important, change which has happened in the law is a very major relief for the taxpayers is this end of this Rule 9610, which used to be, an unwanted provision, which has been time and again, some way or the other. I think this is one of the most amendment provision, most amended rule in the law, which at least I have seen. Amendment, retrospective amendment, prospective amendment, again another retrospective amendment with all these kind of things. Finally, the GST Council has come to a greater wisdom to understand that this particular provision itself is not even necessary in the law. When something is not even necessary, it's creating unnecessary complication. On top of it, we are trying to only time and again amend it. It's not giving any benefit to the revenue or to the tax. It's only creating more and more problem to the taxpayer, and it's not creating any kind of benefit to the revenue. So why should we be having this particular, restriction? Let's remove it. Okay, I think this is one of the fantastic fundamental, decision which has been taken. But only thing is, I wish, this could have been done long time ago, because many unwanted disputes would have got settled. But right now that they have done, they have not. There is no clarity on the remedy of what happens for the past, and hence we may probably continue to have some or other litigations arising out of this 9610. But let me just give a quick understanding of what is this. I believe many of you may be aware of it, but just to give the understanding for the sake of all. So what happens, we all know, for export, there are two channels: export without payment and with payment. So with payment is basically where you end up paying the tax on the export by way of utilizing your ITC or cash, whatever it is. And then the amount comes automatically by way of electronic transmission through the customs iScape portal. Now, this particular automatic refund is something which is loved by all. The basic reason being, the faster refund, no, there is a great amount of cash flow benefit which is there, right? So you don't need to make a separate refund application efforts, etc., etc. But unfortunately, what happens is this door is completely closed for a particular set of exporters. Now, who are the exporters who are also having some of the import related benefits? Now, what is that import related benefit? Nothing but EPCG or advance authorization. Basically, EPCG or advance authorization gives you the benefit of importing goods without payment of customs duty along with the IGST. Now, why do you do it? Because you end up re-exporting, by whatever that you are importing, you have to do 6 times export within 6 years. So I'm just giving you in a nutshell. Okay. So if this particular, condition is being complied with, then the importer will be given the EPCG. They can apply and get covered under this EPCG or advance authorization. Basically, EPCG is for capital goods and advance authorization is for inputs. Now, the fact that this exporter gets this benefit under, as an importer, is denying him the opportunity to go for export with payment of duty in an automatic mode. And hence, he is compelled to go under without payment. Now, on top of it, what happens when without payment also, there are confusions. By default, it is Rule 89(4). But they have also additionally inserted some Rule 89(4)A and 4B. There is no clear calculation provision which is available for 4A and 4B, right? And the law is also not very clear to say that you have to get covered under Rule 89(4)A and that you will not get covered under 89(4), right? So what happens, typically taxpayers, since the Doors are shut under 9610, they come back to 89, and under 89, the law is not very abundantly clear to say whether you get covered only under 89.4A and 4B, or should you have the option of 89.4 also. Since it's again an open area, there are several exporters who see whatever is the most beneficial. Yes, you can always say, I will apply what is most beneficial for me. Going back to, some of the erstwhile decisions, Dilip Kumar, those kind of decisions. Yes, one can always take what is most beneficial, but again, that was being disputed by the department. So this created a uh, major issue, massive issue for exporters who are also importing, right? Importing with advance authorization and EPCG. Okay. Now, this becomes the greatest relief because all these three rules, Rule 89.4A, 89.4B, and Rule 96.3, all the three are completely omitted from the law. In fact, very interestingly, if you read this minutes, the law committee observed, this is actually the GST Council minutes, the law committee observed that operation of Rule 9610 is leading to unnecessary complication without any intended benefit being served, and therefore recommend that these three rules may be omitted with prospective effect. Again, the issue starts when you say prospective effect, right? Now, what happens for the past? And that consequential amendments in the other clauses may also be done. The law committee recommended that the proposed deletion of these rules in the case where the benefit of concessional or exemption notification which were specified in Rule 9610 or whatever it is has been availed on imported or procured domestically. The refund on account of export can be claimed through IGST refund route under 96, which means going forward you can completely, you can have the liberty to get it as automatic refund or as a refund of accumulated ITC under Rule 89.4. So this is a very important, decision which has come. But there is one more interesting decision as a consequence of this particular thing is from the Glen Industries. Okay. So what has happened in this case is that this omission which has been made is made without a saving clause. What do you mean by saving clause? Saving clause meaning just like, some time back I told you, whatever act that has been done prior to this amendment, then whether it is going to save the taxpayer or going to be in saving of the revenue, this kind of saving clause is not attached to this particular amendment. Okay. So if you want to understand, for example, in GST law you have savings and repeals under section 174. So what would happen is whenever a law undergoes some kind of omission, amendment, etc., etc., the law also comes along with some saving clause. What happens for any act which has been made until now, whether that will get saved in the favor of the taxpayer or in favor of the revenue, this is what we call a saving clause. But this particular omission does not come with any of those kind of saving clause, which means that this the fact that this restriction has been removed can as well be applicable for the past period as well. The court held that the omission applicable for the pending cases also. So it's a very interesting and important judgment wherever you have this case relating to the past, because it's a recent amendment. Any case relating to the past can also get covered under this Glen Industries decision. Okay, so we have a couple of more decisions to quickly discuss with. Okay, the next one is, voluntary payment. This is a very interesting case. What has happened is, the particular taxpayer, somehow they just went and paid voluntary payment of 40 lakhs because of some 2A, 3B difference or, anything. Now, I have made this voluntary payment through GST, through DRC 03. Now, since that it's not only that I have made the cash payment, I have also, made this payment through DRC 03, which is a voluntary payment. Okay. Now, does this constitute tax? Can I get refund of what I have already paid through DRC 03? This is a very important question, especially, sometimes some taxpayers are forced to pay, especially when there is an inspection proceedings or something of that sort. So at that point of time, I have paid through DRC 03. Does it mean I should forget about it? Does it mean I have voluntarily accepted and I have paid that amount? The answer is a very clear no. Okay, it has come from several court decisions, and one such decision is what I have presented here from the Gujarat High Court, where the voluntarily paid amount does not constitute tax. It's not a tax, it's a payment. It's a payment of an amount. Okay, so this does not constitute tax. The limitation period under 54(1) would not apply to the refund of the voluntarily paid amount, as it was not a tax, interest, or penalty liability discharged by the petitioner. Where an amount is paid by mistake or under a mistaken impression, the revenue authorities are duty bound to refund the same, as its retention would be unconstitutional. Okay, so remember, whenever you pay something through DRC 03, that doesn't mean you have already discharged some tax liability. It's only a voluntary payment of an amount. And that's why, the latest DRC 03A holds an irrelevance or importance. So before making any kind of offset through DRC 03A, you need to be very careful, because until you do such discharge of some outstanding liability in DRC 07 vis-a-vis the DRC 03 related, voluntary payment, until this amount has been offset, it is it is not likely that you have actually settled this particular transaction, okay, or the tax liability, correct? So on those lines, any voluntary payment, if you find it at a later point of time that you do not even intend to pay this tax amount, you do not even intend to pay this amount, yes, you have to fight your own case. Again, I'm telling you, these are matters that does not come to you, automatically. But having taken a litigative position, yes, there is definitely a great scope, because DRC 03, unless it is being acknowledged or unless it is being discharged against a particular tax liability, does not constitute a payment of tax. Okay. Now, very interestingly, you can also think of these kind of scenarios, like, let's say, for example, today you have made the discharge because you want to get covered under amnesty scheme. Now, tomorrow, let's say the amnesty scheme benefit is not extended to in your case. Can you go back and say, no, no, I paid it only because I was expecting amnesty scheme. Now that the amnesty scheme is not available for me, I don't want to even make the payment. I want to, uh, go back to this matter. So this is again a very tricky challenge, because we are seeing off late many of the amnesty schemes are being rejected also. It's not that everything is being sanctioned. Now what happens, because I paid this amount, I would have otherwise contested. I would have contested for the tax amount also. Only expecting peace, I paid this amount, but now you are saying even after paying the tax, you are rejecting for interest and penalty. Now what should I do? Can I go for litigation? I'll give you the answer in a different nutshell. Okay. Let us say you have already made an appeal application. Your appeal application was already pending. At that point of time, if you have withdrawn and then you have come back to this amnesty scheme, paying the remaining tax amount, whatever that you want to pay, at that point of time, if your amnesty scheme gets rejected, then you always have the option of anyway going back to your appeal application. This is what that frame of 128A itself says. So if you have an appeal application that is being withdrawn, and then you go for amnesty scheme, what happens is, if the amnesty gets rejected, you come back, you again have the option. You have two options. Either you can continue to dispute, to say how can you reject my amnesty application, you can go for an appeal against the amnesty application. Alternately, you can come back to your original appeal which was in place. Okay, but let us assume there is a situation where you have not even filed the amnesty application in the first place. Amnesty application itself, sorry, you have not even filed the appeal in the first place. Okay, let us say, for example, the order has come. Within 3 months, you have the time limit to file the refund application, sorry, the appeal application. At that point of time, you have consciously taken a decision not to even appeal against, rather to discharge the tax liability through the amnesty scheme. Now, the amnesty scheme gets rejected, let's say after 4 to 5 months. At that point of time, you already lost the time limit for appeal application, because it has been long since you have got the original order. Now, can I go back and make the appeal application against my original order and original order? That may not be possible, because it's time barred. Then am I compelled to only go for an appeal against this refund application, this amnesty application which got rejected? Yes, you do have the option, but as a taxpayer, let's say the only reason for why I paid that tax amount is because I expected the relief of interest and penalty. But now that you rejected my interest and penalty waiver, I not only want to contest the interest and penalty, but I also want to contest the original tax also, because I know I have merits in that case. Why should I be missing out on it? I want to contest that also. But having originally filed an appeal, the answer is no. Now, is it possible for me to go back and appeal against the original order, though it is time barred? can I go back and file an appeal? This is an issue for which actually there is no straightforward solution which is available in the law. Okay, this is see that's why in fact I had written an article also in a private forum about what are all the challenges, what are all the key issues that would be there in the amnesty scheme. In that, I have listed on these kind of pointers as well as to, there are several points where though it looks as if, yes, go for amnesty application, get interest penalty waived off, it puts you into a lot of tricky or difficult situation at a later point of time. What happens if that gets rejected? What happens if, that's being accepted, but at a later point of time, it comes back around? What happens if you fail to file an appeal? So these are some of the challenges. So the answer lies that either you have to make an appeal against your original order and then contest to say that it was well within the time limit. The interim period of amnesty application should be done away with because that was only for the purpose of amnesty. Once it got rejected, again I have to come back to the original appeal. This is a matter which is not available in the law, which means you have to fight this case even for the time limitation of appeal application. The alternate smarter route would have been, as much as you're going for the, even before going for the amnesty application. In fact, we also suggested for some of our clients something like this, where strategically, see, they also wanted to appeal for the against the order. At the same time, they are comfortable with the amnesty scheme if at all they are going to get the amnesty waiver. Now, but they are very clear if the amnesty benefit is not available, I don't want to accept the case as so it is. I want to go against and I want to fight the entire matter, including the tax. Now, what do I do? The one strategic move is first to make an appeal application so that yes, you have an appeal application and then withdraw the application and come back to amnesty scheme. Because if the amnesty scheme gets rejected, you can always go back to the appeal application. No issues. This would have been a strategy. Now let's assume I have not done that strategy also. Then the next option what you can also explore is the refund option. Okay. Whatever that amount I have paid, for the purpose of amnesty application, that was an amount which has been paid for the sake of settlement. Now that this waiver is not available, I want the refund of whatever that I have paid. Okay, can I claim this? Because I have not accepted the liability. I have paid only, expecting peace. Now that you give me back this money. Okay. Department will reject it. Then based on the rejection, you may have to probably go further for the appeal of against the rejected refund order. This is also another route which is possible, but I'm not saying, see, one size shoe does not fit for all. One has to take when it comes to litigation, strategy plays a very important role. It's not that, X is the solution for A, Y is the solution for B. Okay. For every litigation, though the idea would be to pursue the litigation, how do you pursue the litigation? What is the route that you take for the litigation? That is primarily important even before the grounds of the litigation. Grounds of litigation comes at a later point of time. That's only on the merits. But what is the route in which you want to, go for the litigation? The strategy is something that is extremely important. And for you to strategize, what is equally important is to be aware of what is happening in the present, foresee what could be there in the future, and look back what has happened in the past, because end of the day your past decisions on and the principles based on which these decisions has been laid down in the courts will be very much helpful for you to strategize as to how you are going to position yourself today for you to handle the litigation in the future. So taxpayers would typically say yes, let's go against for an appeal, but it's very important for the consultants or the litigators to take a very clear position, not just for today but also for the future. Yes, if it's more like how you play the chess game, right? You take this move, you know what could be the next move, and then you should be prepared for what should be the next move. So litigation is all about strategy. So it's about having a very clear thought process as to how you want to take forward the matter. Ultimately it's about getting the best justice, right? Now, coming back, the next decision is on the cancellation of contract. When the contract itself gets cancelled, whatever tax that has been originally paid, that needs to be refunded. It goes without saying, it's logical, but having said that, there was a tax which has been paid and these kind of matters were under dispute. And then finally, it's a very recent decision. As I said, going back to, in fact, these kind of decisions should, these kind of matters should not even warrant court interference. It should be something that should be easily understandable, acceptable at the lower level itself, because there are several decisions in favor. But having said that, yes, these matters have to unnecessarily travel to the court to get the justice. Okay. The next one is important. It's a supplementary refund claim. Many times it could happen. I have made the refund application and at a later point of time, I find that something got missed out. Okay. Instead of claiming 1,000 rupees, I claimed only 700 rupees. Now for the differential 300, can I make a separate application? Unfortunately, Circular 125 restricts. Circular 125 says that once refund application is submitted, cannot be subsequently allowed to file under the same category, under another refund of the same category, okay, for any previous period. Yes, though this restriction is also demonstrated in the portal, what do we do then? We have to go for application through the any other refund category. But in those kind of instances, this decision would be definitely helpful. ABN Industries, this is a case of supply to SEZ without payment of tax, where initially it got approved, and then they find out that there is a quantum difference. They wanted to make a separate supplementary refund application. The court has ordered in favor of the taxpayer. This is, another case in the case of this Gillette diversified operations. So refund filed online, which has been followed by manual filing also. Deficiency memo has been issued and the claim has been resubmitted. Resubmitted date. So what happens here is, don't get misled by the heading. So the point here is this is about the what is the time limit which has to be calculated for the purpose of this deficiency memo. Okay, original filing date has to be considered or how it has to be done. Okay, so typically when you make a refund application and then if you are going to receive a deficiency memo, the law says from the date on which you made the application till the date of deficiency memo receipt, this particular duration will get excluded for the purpose of the 2 years calculation, which means what? Let us say, today we are in 3rd of June. Okay, my last date is on 30th June. So if I have made an application today and the refund against which the deficiency memo is received only by say 3rd of July. Okay, so my original due date for this refund application is on 30th June. But for me, the deficiency memo is received only on 3rd July. Now, can I go back and make the revised submission fresh application after the 3rd July? The law clearly gives a provision that yes, this can be made because, but how it has to be made is that the duration which I have now, today is 3rd June, my last date is 30th June, which means this 27 days would still be in my hand from the date on which I have received the deficiency memo. Okay, so that's the way in which it has to be seen, which means from the date on which the deficiency memo is received, within that next 27 days, it has to be applied. So basically, for the 2 years limitation, this will get excluded. What has happened is the question here is should it be given retrospective effect or not? Because this was a proviso which has been inserted at a later point of time. But then the court took a very liberal view to say that this is only something to clarify as to how it should have been done from the day one. So yes, very clearly this is eligible. And again, there was an amendment which has happened in the section 54(2)(e). I'm not getting into it because that was creating a confusion in the law as to how to calculate the relevant due date. So the relevant date, because a common provision has been framed for accumulated credit under clause E for both ISD as well as for export. But then for export, you also have a specific provision. Okay, and then they understood and then they have made the amendment in that explanation 2E to say that this is only for ISD and not the context of this export without payment of duty. So because of these confusions also, this particular refund was being denied, but finally it was held in favor of the taxpayer. Okay, the next one. Now, retrospective impact of the refund. Very, very interesting and important one. Most of us have several issues when it comes to the inverted duty structure. So I just want you to pay very important attention to some of the decisions which are there for inverted duty structure. Okay. I have a few cases to discuss on this inverted duty structure. One is this, where, see, what has happened here is that for inverted duty structure, the restriction has been imposed for some edible oils through this notification 9/2022. And then the circular also says it has to be applied for any application that would be made from here on. This has led to a problem that, see, today you are imposing a restriction, but for me, I have the eligibility to claim refund for the last 2 years, right? So I always, till date, I was believing. Till yesterday, I know I have last 2 years of refund to be claimed, and suddenly you impose a restriction. You impose restriction for going forward. That is completely fine. But last 2 years, you should allow me to claim the refund, right? Because this is not a credit which I got accumulated today. So this is exactly the background of this particular decision. So what has happened is for inverted duty structure, all of a sudden this product got the restriction, and when the refund application has been made for the past 2 years also, department started rejecting, stating that the restriction has already come and hence it would not be applicable. And this notification is applicable even for the last 2 years also. Then the court said, no, no, you have placed a restriction. That is completely fine. But today only have placed the restriction. Whatever credit gets accumulated from today, this restriction would be applicable. The policy makers have the discretion to frame the policy to restrict. That is completely fine. But for the past 2 years, when you have not imposed any such restriction, there was a promise which has been given to the taxpayer that yes, you are eligible for the refund. So restricting that today would lead to promissory estoppel. So once you have already given a promise of refund, that cannot be violated today. And hence, and again, that was also linked with another decisions to say that there cannot be an artificial class to differentiate between who has made. See, let's say, assuming if at all I have made this application, the last 2 years of application, let's say if I have made before this restriction has come, will I not be eligible? Yes, I would have been eligible. Just because I didn't file for the last 2 years, though which is still within my statutory time limit, just because I am filing this after this restriction, does it mean I am not eligible for whatever that has got accumulated in the last 2 years? So you cannot make a discrimination between who has filed before and who has filed after. The discrimination could be only based on when the credit got accumulated. Is it before or after? Not based on when the filing has happened, especially since you have given the 2 years of time limit for the filing purpose. This is a very important decision which would definitely be helpful for anybody who is going to face any kind of refund related restrictions to understand that the restriction could be imposed today. That doesn't mean I have to immediately take the imposition for all my refund filing applications. This could be applicable for all my transactions from now, but that will not affect any kind of benefit that could have accrued for my previous past transactions. Yes, so a very, very important judgment on those lines. Again, this has emanated from, this is another important decision on Ascent Meditech. Many of us know this very famous VKC footstep decision from the Honorable High Court. Because of this decision, the inverted duty structure refund has undergone a change. And because of the change in the formula, the taxpayers are resulting with a higher refund calculation. It's not that there is any kind of new benefit. The only problem is the formula should have been that. So the formula should have been from the day one, but then the formula was otherwise. Then after the Supreme Court decision, the formula has been changed because the Supreme Court decision very clearly gives a recommendatory note to the GST Council meeting to say that there is an anomaly in the formula which the council should consider to correct. Okay. And then the council has made the changes in the formula to give the actual benefit that should have been passed on. So what happens now is that whether this particular amendment in the formula can be given to the period prior to the amendment. Okay. Now, what happens? This particular decision is in favor of the taxpayer. Very interesting decision, very unique decision because, but the question here is, can I now take this decision and apply it? No, the question could, I mean, the answer could be a no because this amendment has come in July 2022 and it has been almost 3 years since it has happened. So it may not be relevant, but point here is these learnings are important. Now, which means what? Let us say at that point of time, if you have tried to make the application stating this amendment is for my past period also and hence because at that point of time in fact you had a bigger quantum also because due to COVID relief 4 years of refund could have been obtained. It's not just 2 years. There was an extension of 2 years. So effectively there was 4 years could have been claimed. I'm not saying 2 years got extended, but the calculation will lead to a situation where at some point of time you can even claim for the last 4 years. So that is the peak period in which this clarification came up. If somebody has actually taken up their own case to fight that, even for the past also this kind of formula change is applicable, then yes, these kind of decisions would help you as a precedence. So the next one is, the other famous Patanjali decision. So this is a very interesting case. What would happen? Many of you would have also experienced after getting the refund, sometime later you are getting a notice for show cause notice for erroneous refund, right? So this is a very unique decision. To what extent this decision could sustain in other cases or in the court at a higher forum, that is a questionable aspect. But at this point of time, if at all you want to fight on this matter, yes, you have, something in your hand. Okay. So this Patanjali decision, what it says is that if you have already, sanctioned the refund, which means the adjudication has happened, the same matter cannot be once again adjudicated by way of issuing a notice in section 73. If at all the department wanted to contest against the sanction of refund, they should have gone only for an appeal under section 107 or 108, and starting a recovery proceedings through section 73 is not acceptable. Okay. So the very, very, interesting decision which has come from the Gujarat High Court. And the next one is, this is very, I mean, very crazy as to how these kind of matters comes to High Court unnecessarily. So what happened? There is, the export of services happens from Delhi branch, but the same supplier is also having a registration in Bangalore, and the bank account is maintained in Bangalore. Okay, there is a Bangalore bank account in which the money has been received, but the export of service happens from Delhi branch. Then the department said, no, money is not received from you. That's a distinct person. He has received the money and you are not eligible. I mean, it's a peculiar thing. Why should they even, it's very free. The service place of supplier is only based on place of business. It is not placed on bank account, right? We are at free to actually make a supply from one particular state and receive the money in any other state also, even if it is relating to export. These kind of issues should not even have risen, but that's how it has gone. And subsequently, the court has also held in favor of the taxpayer to say that these kind of, don't go with the bank account. Ultimately, the services, there is no denial. Export has happened, export of services has happened, the money has been received, the conditions are clearly met. How can you say that just because the bank is in some other state doesn't mean the bank is, the money has not been received? Okay. The next one is whether the time limit is mandatory. It's a very, very interesting judgment, but I am highly doubtful to what extent this will sustain at a later point of time. So, any decision which is taken based on this particular approach, to my mind, is an extremely aggressive approach. Okay, because what happens is for the 2 years time limitation, the law uses the word may. Okay, may meaning it's not mandatory; it is discretionary. The taxpayer may file an application within 2 years. So what happens is this 2 years is not a restrictive condition. So on these lines, even though this particular refund application has been made beyond 2 years time limitation, Jharkhand High Court has held it in favor of the taxpayer to say that that it's not a precondition, it's not a statutory condition to make the application within 2 years. The law uses the word may. Okay, but as I said, it's a very aggressive position to take on these lines. Okay. In fact, we also have a similar court decision from the Madras High Court in the case of Lenovo in 2023. But that decision or that particular issue is not on these lines. The issue is altogether different. It is relating to SEZ, supplies refund. The question is not at all about whether can I claim it beyond the 2 years. No, that's not the question there. But incidentally, there is a particular noting which is there in that decision where the Madras High Court has noted that the law uses the word may, which means that it is discretionary and not mandatory to make the refund applications within 2 years. But all I can say is that your doors are not completely shut. If at all somebody wants to experiment, they can experiment and try under this category. But the sustainability of these matters are highly subjective because it's a very settled law. Even in the previous regimes, there are several decisions to say that just because refund is a right, it's not a vested right. It's a statute right. When it's a statutory right, the statute will very well impose some of the conditions within which it has to be done. You cannot have it endlessly. It's like how you have the time limitation for ITC availment also. The next one is, again another interesting judgment on in the case of where the section 5411. So what has happened? I'll just give it to you as a story so that you can always refer to this case. So what has happened is that this particular refund was not initially granted, and then the matter went to the Delhi High Court. Delhi High Court has held the case in favor of the taxpayer and already sanctioned given a direction that the refund should be sanctioned. But what happened? Despite having a High Court decision in favor of the taxpayer, the tax authority held back this refund amount. They were not giving this refund. They were withholding it, citing section 5411. 5411 says that it is giving me the power to withhold the refund. Now, department has taken a decision to appeal against this particular court order, and hence we don't want to pay you this refund. Okay. Then, because it has been withheld, the taxpayer has to once again go back to the writ remedy, go and knock the doors of Delhi High Court, and Delhi High Court said, already we told you very clearly that this amount has to be refunded. You have not done that. You are citing reasons of Section 5411, which is not acceptable, and that this money has to be immediately refunded along with the interest. What is this 5411? It's very important. It says where an order giving rise to a refund is a subject matter of an appeal or further proceedings, or where any other proceedings under this act is pending, and the commissioner is of the opinion that such grant of such refund is likely to adversely affect the revenue in the said appeal on account of misfeasance or fraud committed, he may give, after giving the taxable person an opportunity of being heard, withhold the refund till such time he may determine. But the point here is you have to read where an order giving rise to a refund is the subject matter of an appeal. Okay, here it is not that it is not a subject matter of the appeal. This is something where it is very clearly won by the, so once the matter is in favor of the taxpayer, they are supposed to give the refund. If they want to go for further, appeal against the particular order, they can always go for the appeal. That's a different story. But having said that, I cannot hold back the refund for this reason because the order is giving rise to a refund is here not the subject matter of an appeal. This is not a subject matter of appeal. This is something where it is already something which is sanctioned in favor of the taxpayer. Okay, so lastly, I want to conclude with this one important, dispute, which is a very common dispute in inverted duty structure. Okay, my input rate is also 5%, my output rate is also 5%. But unfortunately, apart from this, I also have a lot of other components or consumables or packing material, whatever it is, because of which I have some other items which are taxable at 12%, 18%, whatever it is. In this situation, can I claim refund under the inverted duty structure? Inverted duty structure typically refers to a situation where input rate is higher than output rate. But it never says that it is the primary component where it should be the input rate that should be higher than the output rate. Okay. There should be some input rate which is higher than the output rate. Okay. But unfortunately, the circular 135 also very specifically says that refund has to be denied if under the inverted duty structure, if the input and output both are falling under the same tax rate. Okay, this has been struck down in this particular, Madras High Court decision. Everybody is spinning this. The circular has been already struck down, in fact, by various high courts also. Despite the same, the circular has been applied to the facts of this particular case also. This has drawn the reference from Honorable Supreme Court decision in the case of Kusum Ignot. Okay, so this is a very, very important and interesting area. In fact, we also have a similar judgment from Indian Oil Corporation. Indian Oil Corporation has already taken a judgment, has got a similar judgment in 2, 3 high courts, if I'm not wrong. Apart from Bangalore, there is a by I'm not if I'm not wrong. There are 2, 3 high courts. Same Indian Oil Corporation has taken a similar judgment. So Indian Oil Corporation, the issue here is the purchase is also LPG, it's basically the domestic LPG. At the same time, the sale is also LPG. Both are taxable at 5%. But can I deliver this by hand? How do I deliver this? Obviously, it has to come in a gas cylinder, correct? Domestic gas can be delivered only in a cylinder, but the cylinder is taxed at a higher rate. Okay. When the cylinder is taxed at a higher rate, quite naturally, it is the gas plus cylinder both combined together is what I am delivering. Correct. So the cylinder is taxed at a higher rate, which means I invariably have an inverted duty structure. This has been denied, stating that gas is also your input is also the same gas, your output is also the same gas, both are taxed at the same rate, and hence refund cannot be applied in this scenario. But then the court has already held it in favor of the taxpayer to say that it is not possible to deliver this without actually having a cylinder. So cylinder is also one of the component, it is also one of the input. How can you say that cylinder is not an input? It's only the gas which is input. Input is meaning input of goods which is used. That's all. It is used in the course of the business. So you cannot try and differentiate. For one particular output, I may probably have hundreds of input. I cannot say this is the primary input and inverted duty structure will be decided based on this one particular input alone. That's not possible. Okay. So the court has very clearly held it in favor of the taxpayer to say that even though the tax rates is the same for both input and output, it is still eligible for inverted duty structure refund. Okay. So with this, I come to the end of this particular presentation. So, let me go to the uh, Q&A. I think there are several questions which are there. I just want to understand, Impreet, how do you want to take forward this? Because, the list is huge. Till now, it is
Ma'am, you
almost
can take few questions which are pertinent, which are something different from the presentation,
okay. Okay. So let me just quickly see. Okay, in the case
but
of export,
relevant to the topic.
okay, in the case of export, whether EBRC is a pre-requirement. Okay, it's a very important aspect which I anyway wanted to discuss. Thanks for highlighting that. So when it comes to this, EBRC, see for goods, it's not a precondition. It's only an ex post facto condition. Okay, you should have received the money within the RBI time limit which has been prescribed. But for services, it's a precondition. But what is the precondition? The precondition is that the money should have been realized in forex or in INR wherever it is being permitted by RBI. Okay, so please understand that this FARC or EBRC is not a requirement anymore, or rather, I would put it this way: the forex receipt is not a requirement anymore. This is in fact not a recent change. This change has happened long back from the RBI. Okay, India has already liberalized these policies to state that export and import can be made in INR. Or to put it otherwise, there is a sense of realization to understand that if I do not acknowledge, I do not give the importance for INR, I do not start international transactions in INR, how do I expect some other country to accept INR as the global currency? So if INR has to be a global currency, first of all, India should accept INR to be a currency which can be traded for your import and export purpose. So this has been liberalized long back, which means RBI has already permitted even you can raise the invoice, you can also receive the money in INR. That comes through something called a special INR Vastro account. If the money is received through special INR Vastro account, then obviously there is no question of forex receipt, and hence all these EBRC, FARC, everything can be done away with. But maybe you may have to have a proof to say that yes, this money has been received through these channels only. This has been actually received from that foreign party. So those kind of aspects could be required. So any other big questions? Okay, share the PPT, unique in nature. Yes, I think this will be definitely shared by ITTC, and they have a basis of how that can be uploaded as well. Is there any provision for refund of input credit of CIS? See, basically, you have to understand when it comes to input credit, the refund is possible only under two categories. One is basically they export. The other one is inverted duty structure. So for all practical reasons, maybe if there is a peculiar situation of this cess falling under inverted duty structure, that can be experimented. Otherwise, in a normal scenario, maybe not. So copy paste the article what you have written. So I'm not sure what article you are referring to. Maybe if you are even on this Vastro account and other things also have written an article on this amnesty scheme also. Yes, you can just Google search. You'll be able to get it GST Sharda and then amnesty scheme issues challenges. If I'm not wrong, I have posted two articles. One in Tax Guru, the other one is in Tax Sutra. Okay, that's what my memory says. Maybe I have to just check. Okay. So voluntary payment is the amount paid as tax and limitation period will also be applicable. See, it's definitely sure the officer will take this position. Officer is not going to tell you, yeah, I agree, this is a voluntary payment, I will give you the refund immediately, DRC 03, whatever you have paid. You cannot expect these kind of matters to directly be accepted from the officer side. That's why I said there are many matters which could become a subject matter of litigation. But what is important is at the show cause notice itself. I mean, even before you go for making the refund application, be extremely strong on how you carry this matter. Even if this matter has to go until the Supreme Court, you should be very clear on how you are going to position yourself on a litigative strategy. And that needs to be presented at the show cause notice itself. Don't wait, let me go to the tribunal. At that point of time, I can give these, submissions. At the show cause notice level itself, try to keep all your positions very clear, all your legal aspects very clear, so that in fact, that has helped us in many situations to get the relief at an earlier pace itself. So the more you are strong, you don't need to wait for tribunal to actually give a case or represent a case in a way it has to be represented in the tribunal. Maybe for all physical presentations it may not be the same, but then on document you can always put forth everything as how you are going to take it up at the higher forums as well. Okay, and refund beyond 2 years limit, there is a Madras High Court judgment, but officers are not accepting it. I mean, as I already said, don't expect officers to accept. It may not be possible. You have to understand that certain matters will not get accepted. Okay, officers are duty bound to follow the circular and other things. And the High Court decision, also Madras High Court decision, what you are saying, it's not actually in that context. That Lenovo case is not at all in that context. Lenovo case is altogether in a different context. Just that there is a wording which has come, there is a particular para in which this particular line has come. That doesn't mean the court is advocating a view that no, anybody can claim at any point of time, no time limit, you can go and do it. Okay. So for you to take that benefit, again, as I already discussed about it, it's a very, it's a very, I would say it's a very extremely aggressive viewpoint. If at all you want to take that, you may have to make it very clear as to how you are going to, how far the client is having the risk appetite. These are some of the things that you need to be strong about. Okay. So whether rent paid under RCM can be claimed. So obviously that is our ITC. In case of unclaimed ITC, export without payment of tax. Absolutely, I don't think there is any restriction as to why you cannot claim that refund. Okay. So tax collected without acceptance, planning to go for refund, which will be rejected. See, it may get rejected, but the point is don't go beyond 2 years and then put yourself into the time limitation issue. If at all it is being forcefully collected, if at all you want to contest against your own, voluntary payment, do it at the earliest. Don't wait for something to happen at a later point of time. Condemnation of delay in LUT. See, there is a question on this. Let me put it this way. There was a previous circular 37, which was way back in 2018. We had a circular 37 that talks about this, matter. But then it does not say that even if LUT is not filed, it is okay. It only says that even if there is a delay in filing LUT, it is okay. But at this point of time, what happens is if the financial year gets completed at later point of time, you may not be able to file the LUT. So at least if your case is falling, you are able to file the LUT, though it is on a delayed basis, you have a very good case because section 37, I mean, the circular 37 itself is a straightforward basis for it. But if it is a case where you have not even filed the LUT, then it is a, litigative matter. The court may take, there could be two views to it. Okay, there are cases where court has taken a position, even the circular also says this word, when the substantial compliances of export has been complied with, then the procedural, this is only a procedural delay. LUT is only a procedural delay. Okay. And the other ground also which you can take is that the revenue has nowhere been prejudiced by me not submitting the LUT. Because it's not a bond, it's only an LUT, which is a procedural matter. Okay. This is one view. But the department would definitely heavily contest on this matter to say that there are decisions there are decisions from the court which says that the substantial compliance, even though there is a substantial compliance, the substantial benefit can be extended only if the procedural conditions are being met with. Now that the procedural condition has not been met with, then the substantial benefit is not extendable. So these kind of decisions are also there. But as I said, in the case of LUT, you may slightly have a higher chances. The reason being, LUT, though we call it as a procedure, it is not a very great procedure, which would otherwise put the revenue into a different, altogether different parameter. Okay. So it's a case which needs to be only litigated. So I think, let's end the session here because we have already slightly ran out of time. Now, should we take up any other questions? Impreet?
Thank you, ma'am. Thank you for such an interactive session. As education turns mirror into windows by removing the barriers, so is your session which has helped us remove the barriers of ignorance and knowledge. And really, the insight into the refund will make us will pave a long way to adhere to the compliances, both in the letter and spirit. Thank you so much.
Thank you so much. Thanks a lot always, to IDTC for creating a platform like this. I suppose today we have almost 1,000 participants who are, attending this session, across several states from the country. So thanks a lot for IDTC for having given me this opportunity. Thank you so much.
Thank you once again, ma'am. We can sign off for the day.